At a special meeting of Parliament's Budget Committee, familiar faces exchanged greetings, and for some of those catching up with colleagues after the elections, it would be one of their final appearances. With the EU now on more stable ground, the Commission unveiled its draft proposal for the EU's €142 billion budget for 2015. The focus was on continued growth and honouring commitments. The initial reaction by MEPs was positive.
It is in line what we have expected from Commissioner Lewandowski, which is support the growth, employment and jobs, as well as the further reduction of the administrative costs seem pretty reasonable and logical.
But the big issue with the budget 2015 is to address a growing problem, an almost €4 billion backlog of payments. Since 2013, the gap has been widening between what the EU says it will pledge its money to and what it in fact gives its money to. To stop this rolling over into the next financial year, the Commissioner proposed using contingency margins to help balance the books. But according to the author of Parliament's report on the budget, unpaid bills in fact total some €24 billion.
With this contingency margin, if we approve it, we can smooth the situation and maybe we can assure the payments for 2, 3, 4 months, but we are not going to finish the year in a good situation.
And even the Commissioner had hard words for Member States.
At least some Member States tend to forget that there are financial implications of their political decisions. Here is the problem for several years. There are financial implications of political decisions. If we promise, we should deliver.
MEPs are expected to approve the Commission's proposal, but for some outgoing MEPs at the meeting, they feared a mess ahead for the incoming Parliament.